All right.
Okay, so I have the pleasure of introducing Pavel Hala to our community. Pavel, really nice to meet you. Waiting to hear your voice.
Hello, Dale. Nice to meet you. Do you hear me?
I hear you loud and clear, Pavel. And I don't know if you've used Zoom before, but there's a screen share at the bottom for you, or at the top for you to share your screen.
I will try. I used Zoom only once or twice.
I bet you're going to get it because you're an astrophysicist. You should be able to figure out Zoom, right?
Yeah, I'm sure. It's sound.
I can see it. Then you select the screen. Okay, there you go. All right. So before we get to your product, which I'm looking forward to seeing, maybe you could tell us a little bit about your journey and what motivated you to create these spread charts for people. So why don't you tell us a little bit about your journey in the industry?
Well, I started trading markets myself in 2007 on grains. Actually, it was day trading on grains, not a typical start. But I had a very small account, just $5,000. Back then, I was a student, so I think that's understandable.
And they're great technical markets, aren't they? The grains.
Yeah, they were, and the volatility was not as huge as it is nowadays. Yes. So today, that the strategy I deployed wouldn't be possible to use today because not with $5,000. So
right.
The markets changed over the time.
Although there are mini contracts on the grains, I believe they still have them, right? Well, 1,000 bushel contracts.
Yes, there are some mini contracts, but they are less liquid, and you have to compromise and.
Spreads are bigger and everything, right?
Yeah, so. and they are not suitable for spread trading.
Okay.
But later I discovered the spreads. I mean, interdelivery spreads or calendar spreads on grains, and it was a great strategy for me because of my small account, my low capital, and they allowed me to develop strategies even for such a small account back then. And it was working great. So of course, I was trading mostly spreads on grains, but also on other commodities like hogs and some soft commodities and so on, Nat Gas. So these
it's kind of unusual. Why your attraction to agricultural commodities? Were you brought up on a farm, or were you from an agricultural area? I'm curious as to, most people don't start with agriculture. They come in and there's something in the metals or gold bugs, or they trade stocks, so they trade stock indices. What was it that made you gravitate towards agricultural commodities or commodities as a whole?
Nothing like that. I grew up in mountainous region in Sudetenland in Czech Republic, and there is no agriculture because it's sort of mountainous countryside.
Yeah.
And, the trading or investing in a country or maybe in Europe in general is not. The capital markets are out of the interest of the majority of people. Real estate is a much more common form of investment in Czech Republic and in Europe in general. So the only reason I decided to start with grains is because these are the most liquid agricultural commodities. Because there are more liquid commodities like energy markets, but among agriculture commodities, the grains are the most liquid, which means that the spread strategies are great because you can trade
execute.
You can trade even more distant contracts, more distant spreads, and the risk is usually lower when you go somewhat back on the back end of the curve. If you are not just trading near the front end of the curve, because the potential rewards are the highest, but also the risk. So that was one advantage. It was a physical market with nice seasonality trends. And also another advantage probably is that, and I forgot it right now.
Okay. All right.
So,
I understand. They were the first major futures contracts, grains. I mean, the Chicago Board of Trade, the first major commodity exchange before you had COMEX in New York and the Mercantile Exchange in Chicago. So, the need for hedging grains, and you had other grain exchanges in Minneapolis and Kansas City. So I was just curious because most people, I've done quite a few interviews, and not that many people gravitate towards trading grains unless they've kind of come up in the industry. So why don't we get to the product that you've created and how you use them and how it might be of interest to people that are watching us live or see the video later.
Great. I just realized what I wanted to say. The grains are great were even greater back then because, as I said, it was a physical market. There was a huge connection between the physical market and the futures, and it was not influenced by the outside participants, like the energy markets, for example. The energy markets are global commodities. They are politicized. Players are playing their games in these markets. But the grains, these were commodities, and the contract on CME or CBOT back then, these were the contracts focused on the US crop.
Right.
And they were somewhat isolated, not as some other markets like meats, but still they had and still have great seasonal trends. You can develop great strategies to speculate or make use of the strong contango in these markets. And once the time or after some period, also some outside participants enter the market. So it becomes, it's now more volatile, but still, I think it's the best market for spread trading strategies.
We're having a little trouble with your audio. Keeps getting little minor interruptions, but I just wanted to let you know we could,
so give me a second so I can check the.
Now it's okay, but every once in a while it would seem like it would cut off a little bit. Now you sound good. Just leave that up there. Now,
is it better?
Okay. So Ingmar is saying that it sounds okay there. So just why don't you just continue, and maybe it's just me. Okay. Go ahead.
Yeah, so that's probably the reason why I decided to start with grains. But later I became, or I started developing strategies for various institutions. I was working for one hedge fund in Czech Republic.
Can you turn your volume up a little bit more, Pavel? Just a little bit more.
Is it better?
Yeah, better now. Okay.
Okay. So as I said, later I entered the institutional world. I started developing strategies for a hedge fund and other financial institutions, mostly strategies, algorithmic strategies for volatility products like ETFs and these kind of things. These strategies are quite popular right now, but they were really something really new back then. So that was my focus back then. I was still focusing on or delved some of my time into commodities, specifically the energy markets. So I left the agriculture market and started to focus on volatility products and energy markets. And I worked for some other institutions. I even, was working on developing, deep architecture for market making on European stock exchanges. So that was very interesting kind of work. And, eventually I ended up focusing on my own company on spread charts. And nowadays I'm fully committed to, working on spread charts.
Okay. So let's see what they look like.
So here we are. We are in the app. Basically, our app is focused. It's an analytical app focused on medium to long-term analysis of commodity markets. We have data even for financial futures like stock indices, interest rates, bonds, and so on. But commodities are the main focus. As I said, we are interested in the medium to long-term analysis. Therefore, we have end-of-day data in the app. We do not have intraday data because it's useless for medium or long-term analysis, and the license for the intraday data is quite expensive. So that's the reason why we focus on this kind of research. And our goal, or our once again focus, is to combine multiple sources of data to give you the best overview of the market. So I think I will show you some charts. Maybe I will switch to full screen. I will show you a few charts. I decided to take a look at the energy markets because once again, focused on historically, and I think the energy markets are very important for many players, many traders. They are very, very liquid, and so that's it.
Okay.
And maybe I will start not with crude oil, but with Nat Gas. I mean the Henry Hub natural gas.
Okay.
So let's open a few charts. Let's start just with these. And this is the price chart of the first continuous contract on Nat Gas, which means it's an contract. You cannot trade continuous contracts on any exchange. It's made by connecting individual or futures contracts or parts of the individual futures contracts together so that you can create a long-term chart with really long history. So keep that in mind. But we can see from the long-term overview that the Nat Gas is becoming quite expensive. We are at $4 right now, which historically over the previous decade was the level where the price tended to turn lower. It will be even more obvious when I show you the term structure chart for the Nat Gas, because the curve, I would say, is even more important on Nat Gas than the price of the front contract, because as you can see, the curve is really dynamic. It's rippled. There are huge differences between the winter season.
We're in backwardation here, Pavel, in Nat Gas?
Yes, we are in backwardation on the near and not. We are still in contango on the near end of the curve. I have some other charts, specifically about this metric, but definitely the contango is becoming much lower than it historically was.
I can tango. How about you?
Sorry?
I can tango. How about you? It's a dance. The tango.
Yeah,
it's a joke, Pavel.
I do not know.
I'm not always serious, but okay. Anyway, so Nat Gas in a contango. So what's it telling you?
Yeah, I will speak about contango a minute from now. But right now, what I want to show you is that the price is really elevated, because when you compare the current price with the 15-year average term structure, you can see that the front contract is above the 15-year average. Even when I show you the 30-year average term structure, you can see that we are well above that price. Okay. And that is interesting because something like that would be unimaginable back, few years back. And keep in mind, the averages are valid for today, for this part of the year. They are constructed by taking the prices on August 16 over the past 15 or 30 years. That's because, as I said, there are huge differences between the prices in winter and in the off season.
I know it's probably far-fetched, but does COVID have anything to do with the elevated price of Nat Gas as far as production? We've had a lot of bottlenecks and shortages during this pandemic. Is that part of it?
Definitely. There was a hit to production and the terminals, LNG terminals were shut off, and the rigs were shut off, and so on.
Yeah.
But this that was building, the bullish momentum was building for a long time. In fact, we have been bullish about Nat Gas for some time. For example, in our research, even back in 2020, at the beginning of 2020, I guess it was in March, yes, we released an analysis that just, was about the things that are about to change in Nat Gas. And basically, we anticipated that the Nat Gas would become much stronger than it was, thanks to the supply-demand mismatch. And it was well before the winter storm in Texas, well before the skyrocketing prices in Asia. So we have been bullish about Nat Gas for quite some time. And
that's cool. So if I'm reading you correctly, I'd say that you're probably still long-term constructive and short-term believe that there could be some pressure perhaps for the remainder of the summer into the fall.
Exactly.
Like that.
Exactly.
I'm a mind reader.
Yeah.
So I was thinking that's what you're looking to take advantage of these elevated levels now for just a more of a shorter term type trade, a month or two. Is that your time horizon for taking advantage of perhaps how are you going to take advantage of it? How do you construct the position to take advantage of overvaluation short term of Nat Gas prices?
Well, I no longer trade futures. First of all, because when I was working with the institutions, I had a professional status. But later, I just didn't have time to focus on these short-term strategies. But if I would want to, make use of this opportunity, I would either use or trade it through some more distant spreads, interdelivery bear spreads on Nat Gas. Maybe such as I have one bear spread here, which is the spread between February and January 2022. But frankly, the risk is definitely elevated because of the long-term bullish bias. So maybe I would also go with some option strategies on leveraged ETFs, for example, shorting some ETFs on Nat Gas, but very dangerous for unexperienced traders. So I would like to warn anyone trying this without understanding these option strategies perfectly. So
it sounds like that what you would want to do now that it's elevated, since my request was how you would do it, is that you're just going to be patient and wait for these prices to come back in and then execute a bullish longer term strategy. Is that correct too?
Definitely. Okay. We even released once again in our research a few months ago, exactly a strategy about that, how to trade Nat Gas in April. And the strategy is that we are long-term bullish on energy in general. We are long-term bullish since the end of October, when we released another research video, the ultimate value opportunity, when we called the energy to be the opportunity of this decade. And we are most bullish about Nat Gas upstream and midstream companies, and some oil drilling companies, especially in Canada. But the point is, the best way how to, in my opinion, or in our opinion, the best way how to make use of this opportunity is through the equities, not with the futures or the ETFs on the Nat Gas itself, but through the upstream or midstream companies in Nat Gas. That's the best way how to ride the trend. And
is it because it's smoother as far as in terms of volatility?
Not exactly. The volatility tends to be even higher on these companies, on these ETFs.
All right.
These companies are simply so undervalued that there is more upside than in the Nat Gas itself. And moreover, you would avoid the contango drag on the Nat Gas, because the markets that are in contango, even when you buy an ETF holding futures contracts like UNG, you are losing money on the contango. And of course, when the market is really tight, it can flip into backwardation. But still, even in the undersupplied market, there will be some periods of contango. So I definitely think the equities, especially through some ETFs holding equities, baskets of equities of companies specializing in Nat Gas production and transportation, that's, in my opinion, the best way to go. And the reason why we are still bullish can be visible on this chart, because while the near end of the curve is elevated, the back end of the curve is still rather low. You can see that the prices are, I don't know, below the 15-year average. And if I zoom out, the
market's pricing it as more of a short-term phenomenon, and which it's different than your thesis that it's a longer-term phenomenon, higher prices.
Yes, the market still think that it's temporary. That this is a short-term bottleneck in production and transportation, and maybe weather is bad and so on. This is the game as usual, because this was the game over the past 10 years. Every spike in Nat Gas was just shorted into oblivion. And you can see that if we move into more distant part of the curve, the prices are roughly $2 below the 15-year average. So there is still a lot of disbelief in this bull market in Nat Gas. So I think this creates a huge opportunity. And once the curve will be repriced, I think the equities, the companies, drilling for Nat Gas or transporting Nat Gas will benefit tremendously.
All right. So, well, we're starting to wind down a little bit here in time, Pavel, and I do want people to know how they can follow through after hearing your presentation and the way you're looking to position yourself in Nat Gas. So maybe you could show your website now. I know you have a couple of Twitter handles. Your company is at Spreadcharts, right? Is that
at Spreadcharts.com? So here's our website, just Spreadcharts.com.
Okay.
You can sign up for the app. We have even the free version of the app where you get access to all the market data, and on the majority of the charts, you just click on Get Started for free. And here you can choose the free version that's totally free. We do not want your credit card or anything like that, and minimum of personal data. And you can compare the differences between the premium version and the free version. Basically, the premium version has the signals powered by
everything.
the artificial intelligence research and access to some advanced charts and the watch list. But you can start with the free version. This is all the data we need from you, your email and your password and your country. That's all. You can fill in your data, click on register, and you can start using our app for free. So it's very simple, and you can follow the same charts and analyze them for yourself. And if you need help, there is a video tutorial in the app, so you can use this button to play the tutorial. It's a bit outdated, but we are working on a new tutorial, a more extensive tutorial that will be released very soon. So you can check the data for yourself, and I would encourage you to do that.
You got a nice comment here from Anthony saying you have a similar sentiment regarding Nat Gas Energy as Cuppy and Josh Young on the Market Huddle podcast. You're in good company. Nice presentation.
Thank you. You're kind.
Okay, so you know what? You're now my trading warrior, brother. What do you think of that?
That's great.
You survived an interview with Dale Pinkert, not one of the easiest things to do, and I can tell that you provide a very nice service for people. And Monica's saying that she's going to register. She wishes to learn grains, and I want to thank you, Pavel, for coming here and your presentation, and even giving us a little bit of a forecast in natural gas. And Tim is just registered. So thank you very much for being here to edify the F.A.C.E community. I'm glad I reached out to you.
Yeah, thank you for having me.
It was a pleasure meeting you, and maybe you'll be interested in returning, and I'll catch up with you on Twitter.
Yeah, you're welcome. Goodbye.
All right. So everyone, that's Pavel Hala, and you could go to his website, spreadcharts.com, and that takes an old timer back because, I knew a lot of guys that were spreaders. So interesting way to attack the markets. That's it for Turnaround Tuesday, everyone. Good hunting. You could join the crew in 14 minutes on the morning edge, and I'll see everyone tomorrow. And don't just count your, barrels of oil or your natural gas. Well, count your blessings, and we'll see everyone tomorrow. Adios. Thanks again, Pavel.
Yeah, bye.
All right, bye-bye.